Parliament has been processing a proposal to amendments to the Cooperative Act. Okay? And these proposals contain very many things. And we had a conversation with the Principal Secretary for Cooperatives, the Cabinet Secretary for Cooperatives, and they've been saying, you know, in the new cooperatives, we want to make sure, for example, that SACCOs, you don't just start a Tiaka Sacco between you and your two friends.
Yeah.
Take people's money, alafu mnaenda sherehe, and people's money disappears. Okay? We shall have regulations at minimum requirement for SACCOs, minimum membership for SACCOs, minimum amount to be held in a SACCO, and so on and so forth, to hold money in a SACCO. Then, in the event that that loop has already happened, but then a SACCO still goes under, okay? No, even before going under. A SACCO is in operation, but it is having liquidation challenges. We shall come up with a framework in which SACCOs can actually look at ways of just increasing their own liquidation.
Right.
Okay? And there's a fund being proposed to be set up for liquidation of SACCOs. SACCOs can go there, chukua pesa, right? Like what the banks have, the overnight lending window.
Right.
Okay? In the event, pesa yako iko kwa SACCO, na SACCO imeenda under, what happens to your money? Okay? The same way for banks going under, there's a deposit protection fund. There's a proposal to create a similar fund for SACCOs. So if your deposits in a SACCO, you can get up to a certain amount.
Yes.
The debate now in Parliament is between 100,000 shillings and either 500,000 shillings. Those in SACCOs argue that a majority of the people, actually over 90% of people in SACCOs, have figures of up to 100,000 shillings. So if you just put that cap at 100,000 shillings, you have covered a vast majority.
True.
What happens to the small majority that has 2 million? They only also get 1 million. 100,000.
Wakona kaplan, they're saving, so that they can take a big loan.
Okay.
And then,
but if that thing goes under, where will you go? 90,000 shillings, you may pay 90,000. Maybe I had 2 million shillings in this SACCO, I get 100,000. What happened to my other money? You see? But those are questions that we want to ask now to Maurice Mutai, who is the CEO of the Nation Deposit Taking SACCO, and just understanding the SACCO ecosystem. Maurice, karibu sana, good morning.
Thank you, Eric. Thank you, Mariam.
Good to have you in studio, Maurice. We usually start off with the quote of the day. I'll share it with you. Falaris is with us. Hapa tu.
In spirit.
But sauti imekata leo, so I'll share on her behalf. The quote of the day today comes from Kama Siwor Kamanda, who is a Congolese writer and poet. Said, "To be optimistic is always to look where the sun is rising and not where it is setting." To be optimistic is always to look where the sun is rising and not where it is setting. Do you agree or disagree with this?
I'm totally in agreement with that quote. Opportunities goes for those who are already prepared for them.
Okay. You know, I was reading a tweet from a friend of mine. Someone says, "I don't understand the point of saving in a SACCO." Friend replies, "Wait until you want to borrow money for a project and the bank tells you how your credit score is perfect, but they need 6 months of pay slips. Then after that, they tell you if your employer doesn't have an MOU with them, ata ukitengeneza 1 million a month, you're a risk," and so on and so forth. Just trying to speak to the SACCO sector and why it's important as a form of credit. But let me start by asking you off the bat to give Kenyans context of how savings and credit cooperatives began here and the role they play in the economy and in the credit economy specifically.
Thank you for that question. SACCOs in this country, they remain one of the most critical sectors of the economy. If you look at the financial inclusion, you realize that SACCOs play a critical role in the financial inclusion of Kenyans in this country. Right now, SACCOs have empowered members, close to 7.8 or 8 million or thereabout, to become SACCO members, to save consistently, to be able to access affordable credit facilities. SACCOs have enabled members to be able to own homes. They have enabled members to take their kids back to school. They have enabled Kenyans to be able to cater for their bills. They have also enabled members to be able to build their businesses. So SACCOs are playing a very critical role in the financial inclusion of of the citizens in this country. Yeah. If you look at how the SACCOs began, they were formed as welfare groups, just supporting their members to be able to access small finances, provide to cater for like education for their children, take care of smaller bills. But SACCOs have changed. Right now, if you look at the financial landscape, you realize that SACCOs are big as banks. We have 39 banks in this country. If you look at their total assets, you realize some of the SACCOs or some of our peers are as bigger than some of our banks we have in this country.
Right.
Meaning they play a key role in the economy of this country. The era where SACCOs used to support small welfare things is behind us. These days, any financial solution you would seek from a bank, you don't have to go to a bank. You would get it from SACCOs. If I'm to talk about the Nation Sacco in particular, right now, Nation Sacco would be able to extend a credit facility to a single borrower to the tune of up to 75 million. That extends up to 25 years. The era of giving members credit facilities 2 times, 3 times is long gone. These days, SACCOs are able, they have financial strength, they are able to extend sufficient credit facilities to members so that they are able to undertake big economic activities in this country.
Right. Let's just look at this. Continue.
Eric, before you go, I just realized I have a quick project that requires about 74 million Kenya shillings. Yeah, so I'm going to be speaking.
You're going to
Maurice
just Maurice, eh?
Yeah.
What does she need?
She has a project that would consume 74 million. What she requires, SACCOs operate based on savings and then lending. You save first, then you come to borrow later. She needs to have close to million in savings. Then she needs to demonstrate a capacity to pay, because credits are extended based on the capacity to pay. If she is able to demonstrate that whatever she intends to do with that money will be able to generate sufficient cash flows to be able to repay itself, as we are ready and willing to extend that credit facility. And the beauty with us is this: we've run away from guarantorship model that would hold you back. A project of 74 million, if we asked you to go around looking for your friends who can guarantee you that amount of money, probably you wouldn't.
Yep.
Or you take decades to be able to secure their guarantee. So for us, we say exactly what is it that you want us to do for you, that becomes security for your own. So we've made it easier for you to be able to easily access this credit facility as long as that project is self-financing.
I see. Okay, so it's as easy as that. Yeah? Just 10 million shillings, you tick. Project, business plan that just comes and shows this is a viable thing. Tick, pesa, otas.
Okay.
Then you go and do the thing that you wanted to do with that money. Okay, so that you bring back the money.
So I can pay it back.
Yeah. See, ati sasa uchukue hiyo 75 million kwanza sema first of all 5 million shillings ya kurudishia mwili shukrani.
Kusema mwili asante.
Kusema mwili asante. Then I can now readjust this business plan. I had inflated it a little bit to cover. No. So Maurice, how much in totality have people put in SACCOs in the country?
The latest figures that were shared by the regulator, we were told the SACCOs that are regulated, around 355 SACCOs, both the deposit and non-deposit taking, they control around 1.2 trillion in terms of total assets. But if you look at what the members have put in as deposit, I don't have the latest figures, but could be in excess of 800 billion. Yeah.
So 800 billion shillings, around 800 billion shillings, is what people have actually saved. In
around 7.80 million. That's what they have put in, they have saved. Yeah.
And how much in terms of loans?
Now, if you look at the loans to deposit ratio in most SACCOs, SACCOs have extended more loans than members have put in. Most likely you realize that it could be almost equivalent. If members have saved 800 million plus or minus, you realize probably the loan could be around 750, 780 million, or even in more than that 800 million they are put in. So the ratios are almost matching.
1-to-1.
1-to-1. Yeah.
So when you say that, the people have put in money and they have borrowed, it's, I've put in X amount of money, I may not have borrowed, but then somebody else has borrowed. I can see where that ratio comes in. Is that a risk that all members' savings is out there in borrowings?
There's no risk-less business. Business will always have risks. Risks are managed. If you look at the probably control frameworks that SACCOs are put in place to ensure that they protect members' deposit, we are not saying you just, if you want to borrow, you just walk in and walk out with the funds. These funds belongs to the members. That this net depositor doesn't want to touch loans. What is driving him or his main motive is just to earn rebates at the end of the year. Then there's this other net borrower. What is pushing them to SACCOs is just to access affordable credit facilities. So you need to balance the needs of the two. How do you protect this net saver from his money disappearing by these borrowers? You ensure that you have a credit policy that governs on exactly who gets to access what. Number one, they look at the capacity to pay and the character. We made it, I think the government has made it easier for us to be able to access a credit reference bureau reports so that we are able to see, have you borrowed elsewhere? Are you able to satisfactorily service that loan? So in case you have a bad character, it sends a signal to us. If you fail to pay money for somebody else, why should we trust that once we extend that credit facility from us, you'll pay us back? So character is very critical. Number two is that capacity. Then we look at exactly what is it that you intend to do with this money. Because if we extended credit facility for you to go and undertake any economic activity that is not viable, we are failing you. You easily burn your fingers, and the failure is on us. We are around you to borrow and go and do things that were not viable. So we are very careful on what we fund or what we finance. So members' deposit are very much protected. Yeah.
I have a few questions. One, you've talked about some of the due diligence you do, and you're checking the Credit Reference Bureau before lending. Now, Credit Reference Bureau works with many sources, right? Whether it's mobile lenders, banks. Are SACCOs also part of this feedback loop? So if, does my payment history, debt behavior feed into my credit score in a SACCO?
SACCOs are financial institutions. They are around to list both positive and negative credit history of our member. So that by doing that, we are able now to tell the other players that Mariam has a loan in X institution. So if you go to the other institution, they're able to know already you've borrowed this, your repaying capacity is this, already you've maxed out. So that now they don't extend to you a credit facility without knowing that you have another credit facility with another bank. I think the biggest achievement of these credit bureaus, before we had habitual borrowers, somebody would borrow from institution A, B, C, D, and there was no way of all these institutions knowing that you borrowed from other financial institutions. So you realize your repayment capacity is constrained, but other financial institutions, because you are presenting the same probably financial statement to support your application, and they have no knowledge that you have credit facility servicing somewhere. So they would continue, they would proceed to extend that credit facility to you. But now with this, you're able to tell this member is servicing a credit facility with Bank A, Bank B, Bank C. So his capacity is not there. Yeah.
It goes into, I was thinking about the parallels between banks and SACCOs. Let's do, and it'll feed into a question on how SACCOs make their money. Take an amount of 100,000 shillings in a bank versus in a SACCO. If it's savings, how much am I likely to get in interest from a bank versus a SACCO? Then let's take it as a loan as well. It's a 100,000 shilling loan. How much am I likely to pay in interest to a bank versus a SACCO?
If you look at the most SACCOs, they are just extending credit facilities at 1%, irrespective of the macros in the economy. If you go to a bank, you might borrow today at 14%. Tomorrow, there is no that certainty that you continue servicing at 13 or 14%. The rate shoots up to 20, 23%. So it's always, if you are borrowing within what your SACCO is able to extend to you, it's always better to borrow from a SACCO. If you look at the turnaround time, for any member getting a loan from a SACCO and a bank, SACCOs, you would walk in and you walk out with the funds. These days, they have digitized those services. You can apply it over the mobile phone. For a bank, for you to get even that 100,000, you'll have to sweat.
Are you sure? Banks these days are very...
They've also
they've
started
also
becoming, but for smaller amounts.
Yes, not for, for smaller amounts.
For
the other side,
customers.
Yes. The other thing is, do savings grow interests in a SACCO?
The beauty of savings with the SACCO, SACCOs will pay you rebates on your deposit. If you look at probably the average return for the last a few years, most SACCOs are doing in excess of double digit, 10, 11, or 12 or thereabout.
Right.
If you put your 100,000 in a bank, you'll be very lucky. If the money is sitting in a current account, that money doesn't earn anything. If you put it in a interest earning account in a bank, you'll be lucky to get returns in excess of 4%. So they are taking money from you at 4% and then extending to your sister, brother at 16%.
Yeah.
So why would you take that money to a bank rather than bringing it to a SACCO, so that now your brother or sister can be able to borrow that money at 12%, and then at the end of the year, that money will come back to you in form of rebates and dividend. Yeah.
Okay.
Makes a lot of sense. This is how SACCOs, make sense to people.
Yeah.
And it explains why many people have put money to the tune of close to 1 trillion shillings in SACCOs. Now let's broaden this conversation into the current context, where we have just talked about the Sovereign Wealth Fund. There's the National Infrastructure Fund. There's the mega projects. The president and other leaders have been saying, look, other countries have developed with own resources. There's no point of us going to borrow money from Chinese savers to come and build our roads when you have Kenyan savers who are lending to one another. Why can't Kenyan savers lend to themselves and future generations to build roads that can benefit today and future generations? Okay? So they're saying one of the main drivers for saying let's increase the amount of money that we put into NSSF is so that we can have a bigger pool that will help you in future, and also have a bigger pool for the retirement benefit schemes to also be able to operate with. One of them is infrastructure development. SACCO have also now been introduced in this conversation that money in SACCOs can also be invested into big infrastructure developments. Is that true?
That's not true. There's a lot of misconception about what the bills intends to do or to achieve. If you look at the National Infrastructure Fund that was established just the other day, it has indicated the sources of funding. Government is divesting from enterprises they own to put funds in that National Infrastructure Fund. There is nowhere that they have seen SACCOs should put their money there. If you look at the deposits that SACCOs are seated on, they are short-term deposit. If it's a force deposit, members can access those deposits at any given time over the phone. They can access those deposits are available immediately the members want. If you look at what is called non-withdrawable deposit, the law says SACCOs, if a member expresses the intention to leave, the SACCO should be able to process the refunds within 60 days, meaning those deposits are no long-term. And if they are not long-term, you cannot fix them. If they are short-term, you cannot fix them long-term.
Yes. You cannot attach them to a long-term investment.
You can't. Because they are there just to support members' financial needs.
Right.
If a member comes for a loan, you cannot tell them, we are not able to extend this facility to you because you've tied your money in a national infrastructure fund. It doesn't work like that. The regulations are very clear on where SACCOs needs to put their money in. National infrastructure fund is not one of them. Yeah.
Not in any way, shape or form.
That's true.
Okay, let's take a break. We'll come and challenge that a little bit in terms of creativity. Look, how are we going to develop if 1.2 trillion shillings in asset now, 900 billion shillings or 800 billion shillings in deposits, some of it cannot go into a high return investment like building our airport from Jomo Kenyatta airstrip to finally having an airport in this country. We're having a conversation with Maurice Mutai, who is the CEO of the Nation Deposit Taking Sacco. We'll come back after this shortly.
Kelvin Mwenda from Meru, and I am fixing the nation by ensuring that I educate my fellow leaders about the need to hold each leader accountable and ask for transparency without feeling intimidated, because the leaders are supposed to be our servants, not our bosses.
Thank you so much, Kevin. That's a wonderful, wonderful What's Up Nation video. We love to see and hear from fixers kama wewe. Na watu wa Meru, sorry, I know you feel very well represented today. Give us your What's Up Nation video. Tell us who you are, where you are, kama vile Kevin amefanya, and how you're fixing the nation. Whether it's pushing forward transparency and accountability like he is, or it's just making sure that your hustle limejipa leo. Tuambie. Send that video to 0769 590 762. 0769 590 762. And we'll be more than happy to play it kesho.
Yep, indeed. Are you a member of a SACCO? Have you put some money in a SACCO? Do you owe SACCO money? Are you paying? Are you running into some issues, in terms of repayment? Are you having conversations with your SACCO? Have you come across conversation recently that it seems to indicate that SACCOs are going to be putting money into the National Infrastructure Fund to build roads and airports and bridges and ports and dams and such other things? And what have you felt about that? Maurice Mutai is the CEO of the Nation Deposit Taking Sacco. It's a regulated Sacco by the SASRA, the Sacco Society's Regulatory Authority. He says, first of all, it's not true that that's going to happen because the law that establishes that National Infrastructure Fund does not put SACCOs anywhere on its list. Okay? But it looks at the private sector and says there is money that's going to come in from the selling of the state assets, and then that shall form a basis, and then the board of the fund shall go and say, we have a project X, we'd like to interest other investors to come and put in money. Maybe that's an avenue for it. Now, what's the feeling of that? And that's why we are discussing this conversation, so we can just have some clarity on it. So, Maurice,
yes.
Is it possible that the same way, okay, now let's start by, do SACCOs invest in government bonds? Treasury bills and treasury bonds.
SACCOs are allowed to invest in government securities, including treasury bills, treasury bonds. Yeah.
Okay. Is there a limit, a regulation that caps how much goes into that?
SACCOs can pump in as much as they can in government securities, depending with their liquidity needs. Yeah.
So SACCOs can lend money to government?
They can, and they have.
And they've been lending money to government, including bonds called infrastructure bonds. All right?
Yeah.
So SACCOs have been buying infrastructure bonds. Okay. So So why can't SACCOs put money in the National Infrastructure Fund then? The word infrastructure is the same.
It depends, I think. We look at case by case here, depending with probably the financials of a SACCO. If a SACCO has strong liquidity and accessing their probably members' needs, if they're able to say we are carrying these excess funds and they feel in the foreseeable future they can put money that members will not come back requesting for more loans and then they are not able to get, ASA could be around to be able to invest. Yeah.
Okay. So it depends on the leadership of the SACCO at that particular point.
Not leadership. I was saying the liquidity needs of the SACCO.
Who determines that?
Yeah.
Who determines that?
What happens is
the leadership of the SACCO at that particular point.
No. Liquidity ratios are embedded in the regulations.
Okay.
That you must be having this kind of funds in the event that the members coming for money, they won't track. You realize that the regulation prohibits SACCO from putting money in on-core business. The core business of SACCO is mobilizing deposit from members and extending credit facilities from members. As long as that need has not been satisfied, no SACCO will deny their members credit facilities and put this money in government securities. Meaning, first of all, you meet the members' needs, and then now the excess you are carrying, you can put some in government securities, and then you put in a manner that you can pull out anytime the liquidity needs arises. Yeah.
So what I'm hearing is that there's no law that says SACCOs must put money in the National Infrastructure Fund. It doesn't say that anywhere in law.
The National Infrastructure Fund was just established the other day.
Yeah.
So meaning, I'm not familiar with it, but I need to look at it to be able now to determine whether SACCOs are allowed to put in members' funds. But as it stands,
yes.
SACCOs are not.
Okay.
Yeah.
Not allowed. I said expected to or mandated to. Okay. And I can tell you, there's no mandate for SACCO money to go into the fund.
Yeah.
Whether they can participate as private sector players, I have not seen anywhere in the law where it says it excludes private sector player. You know, there's a private sector, but at the age between, for example, 40 and 45, not younger than 35, or private sector of a company that has
this much.
It doesn't. It just says a private institution, right? Even my own company, if I have some money and I want to put into, maybe I can participate. Just the same way I can go into the NSC and participate in buying the bond to build the Talanta thing on Gong Road. Okay? Now, if that were the case, and we are dealing with a SACCO, for example, that has sat down with its investment committee and its management and determined there's a government paper called the Infrastructure Fund, Infrastructure Bond, that has a tenure of 16 years. We are going to buy into that. So we are saying we are lending the government money for 16 years. Or there's another one that has been floated on the NSC. It's called that Talenta thing? Talenta bond.
I forget the name of the Talenta bond.
Yeah. With a 15-year tenure.
Yeah.
Okay? If the National Infrastructure Fund came and said, we have a project that is a 15-year project, right? What's wrong with the investment committee and the management of a SACCO putting money into it?
So many things goes into considering where you are putting your money in. Once the SACCO does its analysis very well, the committee will determine whether that particular investment is suitable for them to put their money in or not. But risk appetite plays a very huge role. SACCOs are invested in various investment forums. But there are areas that SACCOs are restricted not to venture into because of the risk. For example, if you own a government bonds, I think the regulation is very clear. You are not there so that you can trade using those bonds in the secondary market. Because in the event that you bought a 100 million bond, and then the market way later, you can only fetch 85 million.
Right.
It means if you want to dispose of your board, you book a loss of around 15 million. That loss goes directly to impact members.
Yeah.
So SACCOs are not allowed. If you buy a board, you hold it to maturity. Rarely will you see SACCO actively participating in the secondary market, buying, selling. And I think it's the right thing to do to ensure that members' funds are protected. Yeah.
Okay, I've got a few questions around the Sacco, the Cooperatives Amendment Bill, and some of its proposals. Now, the idea of a deposit guarantee fund, something we've seen in banking. Why are we moving to that when it comes to SACCOs as well? Why this proposal was pushed? And are SACCOs generally behind the idea of having a deposit guarantee fund?
The deposit guarantee fund, that's a timely move. If you look at the Sacco Societies Act of 2008, it's already mentioned there, but it has never been operationalized. This time around, SACCOs have been pushing for this. You realize there's somebody who will say a shilling in a bank is more secure than a shilling in SACCO. For us to be able to level the playing field, is to ensure that a SACCO in a shilling in SACCO is as strong as a shilling in bank.
Right.
We are saying if depositors of a bank, if a bank fails, the depositors, at least they are assured that they will get at least 500,000 per depositor. The same thing, if it happened...
So how much per deposit?
I think it's 500,000 currently. But if it happens, if a SACCO fails, it means depositors are not protected.
Yes.
You walk home with nothing.
Like we have seen.
But I think there is a misconception out here.
Okay.
That when we want to introduce, or the government wants to introduce a deposit guarantee fund, it's misconstrued to mean many things.
Okay.
What we are trying to do is to just to level playing field. And what happens in the event of liquidation, we are saying you are assured of getting X amount. And then once the liquidator is done realizing the asset, it means the depositor who earned in excess of that X amount, for example, in this case, 200,000, it means once the liquidator liquidates the asset of this SACCO,
Right.
then all these other members who had saved more than X amount, they will stand to gain from the proceeds that have been realized from the sale of these assets. It doesn't mean they walk away with nothing.
Does the law give preferential treatment to depositors and members or to other creditors? Because we could be insolvent, then auction or whatever it is happens, but there's so many debts to pay that by the time we're done, there's nothing left for the one who had saved more than 100,000 shillings. And is actually 100,000 shillings the proposal for the guarantee amount?
I don't have the accurate figures, but I think the numbers that were being mooted was around 200,000.
Okay.
We had a story we aired last night. Brian George Otieno actually had this story. And the discussion, it had been mooted at 500,000 shillings. And then there's a discussion of between 100,000 to 500,000, depending on what. And there are those who are arguing, like I said earlier, there are those who are arguing that, well, a majority of depositors in a SACCO anyway are within 100,000 limit. So if you put 100,000, you'd have covered many of them, and you're assured of it. If you put 500,000, then you're now saying you're also staving the need of liquidity because it has to go into
The deposit guarantee fund.
Deposit guarantee fund, and so on. So I think it's still an active discussion.
Okay.
The point is, maybe Maurice, what would you say would be a sweet spot for you as a SACCO? How much would you need to put aside, and for your members?
I think the best approach would be this. if you look at the governance framework, the control measures that have been put in place to ensure that SACCOs doesn't fail is where we need to focus our energies on. So that now, at no point, will we have a failed SACCOs. If you look at the majority of funds that the members are put in, they are with the members in form of loans. To ensure that you've given out quality loans. At no point will members fail to pay that loan. If you look at the governance structure of a SACCO, is to ensure it's very solid. You put people of integrity to be able to oversee the operations of a SACCO to ensure at no point will that SACCO fail. And I believe if we do that, the matters to do with deposit protection fund will just be a peripheral issue. And members will feel secure that their funds are safe. So we focus on what matters to ensure that at no point SACCO fails. But if they fail, at least the depositors or the members who put in their money doesn't walk away with nothing.
Okay. The other question is now, okay, even if it's between 100,000 and 500,000, any depositor who has saved more would still be able to get something back after liquidation. But then I was asking, does the law give priority to members before other creditors?
I'm not very familiar with that, but I believe they will just be ranked with other creditors, meaning nobody has a priority. All of you are the same level. Yeah.
Okay. Then there's also the issue of now having umbrella SACCOs or something of the sort. This pooling of resources. I think the idea is secondary SACCO societies. What's a secondary SACCO society?
You realize SACCOs, unlike banks, they don't have somewhere that they could go and tap resources for inter-SACCO lending. We have cash-rich SACCOs, SACCOs with excess liquidity. Then we have smaller players or smaller peers who don't have that financial strength. If a member goes to access a credit facility from Chaza SACCO, if you're a member of Chaza SACCO, it means it's likely you won't get what you want. And if the SACCO cannot give you what you want, it means it's either you pull out or they have to go to another financial institution, a bank, get a facility at a very expensive rate, and then come and extend that facility to you. It's either they will subsidize or provide they will give you a higher percentage than what they got from a bank. So establishment of central liquidity fund is coming to resolve that. For example, if Nation SACCO is a strong liquidity position, where am I investing this money? I will take it to Bank A. If my smaller brother, who doesn't have enough liquidity, wants to borrow, they won't come to me. They go to the same financial bank A to access the same in form of loan. So the bank is acting as a middleman. They will get an opportunity to mark up the funds. They are paying me probably at 7%, but when my brother, another SACCO, goes to borrow, they will mark up and extend to them at 15%. So what we are seeing, why don't we create a central liquidity fund where a struggling or a SACCO that is not doing so well in terms of liquidity can approach this other SACCO and be able to access funds without this middleman. So it's a good thing. Banks does it. In case they want to tap, they would go to central bank and they are around to do that. So for SACCOs, we don't have that. So we are creating a platform to enable now SACCOs to do that.
Would there also be something similar to this overnight bank lending that banks do?
I believe that's the idea.
But not, this is bank to bank, not bank to regulator or central deposit. So,
the picture will become clearer as these things are rolled out.
I think even the overnight window is sort of controlled and managed by the central bank. It's overseeing it, and probably not putting this money into the liquidity fund for overnight lending. for such short-term lending as well to help with the bank's liquidity. I mean, with the SACCO's liquidity. The idea, like you're saying, sounds the same and sounds like it's a good thing because, the small SACCO then is able to access money to pass on credit to its members to satisfy its core mandate. Take money from your members, extend credit to your members. If you're not able to do that, then what's the point of you being a SACCO? Is there a point for consolidation of small SACCOs? Same way the CBK comes and says, you know what, let's increase the amount of money that a bank should have, of core capital that a bank should have. And that is basically forcing small banks to come together and merge.
Yeah.
Is there a point in consolidation of SACCOs?
I think the current CS, Weekly for Paranya, has been pushing that to ensure that smaller SACCOs merge with the bigger brothers, so that now they're able to extend credit facilities to their members. And I believe it's a good thing, rather than having so many fragmented SACCOs that are not able to support their members in a meaningful way. If they can join us with the bigger brothers, so that now that way they create a bigger financial institution. If you look at this country, there are around 39 banks. SACCOs currently that are just regulated by the regulator, SACCO, there are around 355. And there's so many that are not under the regulation. So you can imagine you have so many players out there and they are not able to do many things for their members. So it's the right thing. Probably we would require a regulation to be able to ensure that smaller SACCOs are encouraged to join their big brothers.
When we had the conversation with CS Oparanya, he was actually saying that the proposal at that point was, let's first of all regulate how a SACCO is licensed. Okay? So one, say for you to be licensed as a SACCO, you must have 1,000 members who have registered, as willing to join the SACCO. 1,000. Then look at having an asset base of about 10 million shillings, right? So that then you're saying those ones that are not at that level can consolidate and start rebranding. Smaller entities come together and start merging and rebranding. So that then you have solid SACCOs in operation. So if they're putting money into the Central Liquidity Fund, they are able to. If they are putting money into the Deposit Insurance Corporation for the Deposit Guarantee Fund, they are able to. If they are borrowing with a stabilization fund short term, they are also able to. And he painted the picture of looking at the bigger credit unions in the US. In the US and the Americas, and where the credit unions hold so much money that they even tell the government, unataka ngapi? Unataka ngapi? The word credit union, government unataka ngapi, are some words that were used by the deputy president recently when he spoke. And then it was now taken, huyu anasema watachukua pesa yetu ya SACCO. How do those SACCOs in those bigger countries, like the credit unions are SACCOs, how do they have so much money and how do they end up being like key lenders of government for infrastructure?
Saving culture plays a very crucial role. You realize probably the reason why Kenyans haven't saved much is because probably once you earn, there is a lot that goes towards just catering for the basic needs, meaning your capacity to save is just constrained. I believe we'll get there one day where people will have enough to save and do other things.
One day.
Is it having enough to save and do other things, or having a mindset that inculcates saving as a culture?
It's
Maybe
a
bit of
mindset.
both. Is it?
Saving is not a factor of how much you earn. You realize somebody is earning 50,000 or two people are earning 50,000. One has a strong saving culture, putting in 5,000 in SACCO every other month. Then somebody else who is earning probably even 100,000 is not even saving, not interested with doing anything. So I believe it's just a matter of SACCO sensitizing members, the importance of putting money aside for a rainy day.
Okay.
Yeah.
Let's close with some feedback, and there's a lot coming through. I'll start with Pauline Haima. She says, to ask you about critical success factors for Nation Sacco specifically. You've been able to give relatively high returns on both deposits and shares. And she also says the biggest safeguard for a Sacco is having an informed membership that participates actively in Sacco affairs, and they keep the Sacco in check. Tell me if you disagree or agree with that. On YouTube as well, Bakari Sagna says the government should appreciate that investors are aware that they can invest in treasury bills or bonds instead of SACCOs. That's true. Duncan is saying, tell us about Metropolitan Teachers Sacco, which members have lost millions of their savings. And there's quite a few of these coming about, and we'll see like what the red flags are when you're dealing with your Sacco. Okay. Charles Ndungu says there's a difference between SACCOs investing of its own volition and government borrowing from the SACCOs directly. And the current proposal reads of the latter, which is risky for members. But I think we've demystified that. Bakari Sagna says government borrowing from SACCOs will directly starve small businesses of credit. SACCOs rely on high liquidity to fund short-term member loans. So that as well we've talked about, and you've talked about the safeguards. Joel Wafula is asking what's happening at Afya Sacco right now. It's now 2 years, no dividends. Reason is there's no money. Please expound on this. And I think there's a lot of questions on essentially what feeds into the financial health of a Sacco, and it also feeds into the question about the factors that, work for Nation Saccos. And when should you start seeing red flags and say, you know what, my Sacco may not be doing well?
Thank you for those questions from our viewers. For us at Nation Sacco, the critical success factors, the way we measure is the impact we are creating on our members. We don't measure our success based on profitability. We measure our success based on the impact we have on that member. If a member wanted to access facility to be able to expand their business, and we've been able to extend that facility to them, and they have expanded their business, that's our joy. We don't measure in terms of how much we are making from our members. It's the impact we've created and then the returns we are able to give to our members at the end of the year. So I believe in terms of success metrics, we've done a lot for our members and we continue to do a lot for our members. Yeah.
I think the other question was specifically what safeguards you have, in place at Nation Sacco to be able to give these high returns.
At Nation Sacco, if there is one thing that is dear to our heart, is governance. Good governance is what we practice. Anything at the board level, if it doesn't address how that one will impact a member, is shelved aside. So any decision is made based on the impact it's creating, positive impact that it's having on the member or the saver. So if it doesn't answer that question, it's shelved aside. If you look at the entire governance structure, we have a very effective board. We've capacity built them to be able to know exactly their mandate, their roles, to be able to oversee that the Sacco is effectively running on a day-to-day basis. And I believe we've done exemplary well. Some of the red flags somebody should be looking out for. If you're putting money, you should ensure that the Sacco you're putting in money, if you look at their financials, the trend analysis for the last even 4 or 5 years, you can pick some red flags. If the Sacco doesn't have enough liquidity to be able to have a quicker turnaround time when it comes to loan processing, where you are submitting an application, and then it takes almost weeks, months to process, that's a red flag right there. So members should be able to do due diligence, to be able to identify good peers from bad ones, and then avoid the bad ones. Yeah.
Okay. Asante. Maurice Mutai, the CEO of the Nation Deposit Taking Sacco, has been our guest. In the next hour, we talk about water. Do you have water? Do you have access to safe drinking water from a tap in your home, inside your house, or at least close to you? Julius Korir is the Principal Secretary in the State Department for Water. He'll be our guest.